Hey everybody, this is Debbie with Bright and my Ness in Antonio, and I am super excited to share this blog post with you. I had the chance to interview the CEO of Masters Wealth Group, Christine Horn, and she's actually very special to me because I've worked with her and she's made a huge impact in the financial health of our family and also giving me peace of mind. So we're going to talk a little bit about her story and why she does what she does, and also we're going to break down some of her great products for you. So I really hope you guys enjoy. Quick disclaimer before we begin. I am not a financial advisor, and this video is for informational purposes only. Remember to always discuss all financial matters and investments with your financial advisor. Thank you. So we met through a mutual friend, through Mandy.
Yes.
And I trust Mandy deeply because she's very smart and we think very similarly. So when she introduced me to you, we kind of talked a little bit about what my personality was, what my approach to investments was, and I got very vulnerable with you, and I told you how I didn't have peace of mind. I believed in working hard and putting the money away, but I didn't really know how to do that. So it was kind of cool because when we met, you understood exactly where I was coming from, and we have made some really cool moves with my family's financial planning and health and all that stuff. And from a year ago, I think we met about a year ago, till now, I have so much more peace of mind. So that's why I wanted to sit down with you so we can share that, because I know a lot of people don't have that peace of mind. So I want to kind of give you the room, even though it's just the two of us here. And so you can talk a little bit about what you do, a little bit about your background and why you're doing what you're doing, because by now you could be not working anymore, but you know.
That would be boring. I mean,
we're very similar. So yeah, I'll let you kind of tell me a little bit about what you did in the past and why you do what you do today, and then we'll kind of go into other questions.
I was very fortunate to always work directly for the president or CEO of the companies that I worked for. So the last client that I had in Dallas with this outdoor advertising company was David Littman from Hotels.com. We took the company, he gave me 3 months to get a plan put together, and we took the company from where it was to from 440 million to $1 billion in 24 months and sold it.
That's amazing.
So, before he would hand me my piece of that pie, he made me promise I would quit hiding behind other people, quit going to work for someone else and start my own business. It took 2 years of, just consulting with people and doing what I could for others along the way. Then I went to a seminar and found out about indexed products.
I feel like I'd never heard about indexed products before. And when you and I spoke about, hey, that peace of mind portion and that safety portion and safe investing, that's when you introduced those to me. And you really opened my eyes to something completely new. So I wanted to make sure, because there's a lot said about index products, and I know there's different types. So I know the type that we set up for me just matched up with that peace of mind that I needed. So explain a little bit what all that means.
Okay, so it's not just about the peace of mind. It still grows just as much as, and literally outpaces what you have invested in the stock market. The trick behind that is when your banker is managing your money or your typical broker is managing your money in variable products, and that's all they're offering is either fixed or variable, nothing in between. Because they make more money that way.
Yeah.
They're making money every time they put you into a different product to track with. I've been with brokers who changed my investments quarterly because of different signs in the market, or different companies that peak at different times of the year. So they're always moving your money in and out and always giving you an explanation for why. You're always hoping that your gains outweigh your losses. So you're always losing some money on the way down before you hit the triggers in place to get you out, so you lose that gain. So you're constantly chasing your investment to maximize what you might earn from it, minimize what you would lose from it. And so once you figure out that they're just throwing that out there, they're making money both directions. When you go into a prolonged downward spiral like we've been for the last 12 to 18 months, and that happens regularly at least every 10 years. If you think back to 2008, we had that huge 38 to 43% drop in the market. Well, 2019, we had the single largest year gain in the history of the stock market. The crash came in 2002.
So I think that was also an eye-opener for me, right? Because you go through 10 years, and especially for me, I'm almost 40, so
Yeah.
the last 20 years there's been a lot of change. So I'm not looking at necessarily, hey, what has happened with the money? And
Yeah.
if we divide it into 10, and this is what you're telling me, if we divide it into 10-year blocks, we are going to see a market downturn every single decade, or a couple, right?
Right.
But then every time our money's going to go down. And I'm going to pull up this graph right now, because I think this is very interesting of what you were talking about, that every time the market goes down, it's going to take you a significant amount of years to actually match where you were before it did.
There's this thing called puts and calls. So like you as a normal trader, you go out there and you buy some stock, let's say, because you believe that company is going to grow and the stock is going to grow, and you put in a sell order for, okay, I'm buying it at $100 a share. When it hits $150 a share, I want it to sell.
Yeah.
Because we know it goes up and down, or it's going to split or something, and you'll buy more later or do something else with the money.
Right.
Okay. You make money on the way down the same way. Most people aren't aware of that unless you're a day trader and you've been trained in how to do all of this. But you say, okay, it's at $100 a share today, but I know the market goes up and down. So when it hits $80 a share, I want to sell my stock. And you make the profit on the way down, just like you make it on the way up. Well, the people who are driving the market down and back up, and that's why you see the market doing that zigzaggy thing all day long, because they're putting in sells for gains and losses.
So, for example, me as a regular person that's not managing the money,
You're
I'm just
stuck
going to
with
see
this-
my stuff go down.
Yeah.
I'm not making money, but the person that's doing the managing is. Got it.
Yes.
Okay.
Yes. Okay. And you have to wait for it to come back up. And like we see from this chart right here, if you have that $100,000 invested and the market drops 30%, if it's recovering at a 5% rate, it takes 7.3 years for you to get back to break even. It's coming back at 9% a year, which would be
Right.
a really strong year. I think most brokerage accounts average somewhere between 6 to 8% a
Yeah.
year in growth. If you're coming back at 9% a year and you've lost 30%, that's still 4 years, 4.1 years for you to recover the money back to where you were before the market went down. So what happens over the years, gradually your money does increase. But is there a way for it to increase a whole lot more? Over the years, you gradually gained from where you were in that up and down trend. But the really scary part is, for instance, like in 2008, people
Yeah.
who were ready to retire,
They couldn't.
all of a sudden they had to work another 5 to 7 years just to get back to where they were before that downward trend in 2008. Well, we saw the same thing happen in 2018, exactly 10 years later. Ups and downs in between, but then the big adjustment came. And then just as we were starting to recover from that, COVID hit and
Yep.
we dropped down again, and we've been in this prolonged 12 to 18 month downward.
So
trend.
tell me about the index products that you offer and how that's different.
Okay, so if you're not a day trader and it's not your job to go out there and make money buying and selling and doing the puts and calls and the sell orders and everything, there's a point at which you have to depend on somebody more knowledgeable than yourself in an industry that's not yours.
Right. Correct. I mean, I'm in real estate. When people want to buy a house, they come to me because I know the ups, the downs, and all that stuff, and I can advise them properly.
Right.
Right.
So that's the way it is with finances. So everybody goes, well, who do I go to? Well, you go to your banker, you go to your broker, and they're required to make money for their companies. So they're making a ton of money off your money, and you can't control the how, whens, and wheres of the upward trends and the downward trends in the market. And you cannot change the reality of what it takes to recover from a downward trend.
Correct.
So those are called variable products. They're variable. They're in the stock market, then the results of it varies. What I do is called indexed products. And once I learned about indexed products, I finally felt like, okay, now I know how I can help everybody who's wanting me to help them with their finances, because this is safe.
Yep.
And over any period
I like
of
that
time,
word.
you will outpace the stock market, even if your gains aren't as high as the highest gain in the stock market, because you're never declining, and because it doesn't have to be actively managed every day, your fees are way less. You just make a lot more money, and you have the security of knowing when you need it, it's going to be there. And let's say we hit a year like this last 12 months, and the market did nothing but drop for 12 to 18 months in a row. You never drop below where your last lock-in is. So you never drop below what you started with.
Mm-hmm.
Okay. You gain every 2 years, your gains are locked in.
And there's a minimum you gain, right?
There is a minimum.
Okay, that's why I like
yes,
to. Yeah.
Yes. There is a contracted return.
Yeah.
So there's guarantees and there's contracted returns. So you're never less than what you started with. You have gains every time. And as the market adds to those gains because of upward trends in the
You're
market,
starting with a new higher number.
you're starting with a new higher number and you'll never be below that. There is no reason for your personal account
To go down.
Your account should not be shrinking.
Awesome.
So that's why I do index products, and I only do index products. Now, other people have come to me and said, I've had an index product before, I'd never do that again. And my broker speaks horribly of them. Well, it depends on how they're written. You have to be with somebody who understands their industry, understands the company and the products and how they're offering them and how to write them correctly so that you're maximizing your gains in the safest way possible.
So let me ask you a question, because I have heard that before. Oh, don't do the index products because it's awful and the fees are super high and blah, 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 blah. So that's because they're written incorrectly, correct?
They're written incorrectly,
Okay.
and or they're with the wrong company. So for instance, the fees on annuity that I like to use right now is less than 1%. And you have that return of a minimum of 5%.
Mm-hmm.
So you're making at least 4.1%.
Yeah, and then a lot of people, what they tell me is like, well, but the cap, they're going to cap you at like a certain amount. But you and I discussed that the caps are really high.
The caps
on the way up.
The caps are high on the way up, plus they lock in, your gains lock in, and they never are less than that.
Yeah.
So if you think you can make more money in variable products, just remember that for everything you gain, it keeps going down, and you have to recover and go back up. Do you gain over a period of years? Yes. Can you gain more with the index products? Absolutely. This is based on an original annuity that had a max 5% gain, 0 loss.
Yeah.
Today's annuities have 0 loss, the 5% gain built in, plus whatever the indexes do.
Which I
that
love.
you're tracking with.
Okay.
So the gains with an index product may be a little more boring. They may be slower.
I'm okay with boring.
They lock in every other year, but they're yours permanently.
Yeah. Okay.
So 95% of my clients are realtors. They love to invest in real estate.
Yeah, so I guess that was going to be my next thing. So let's talk a little bit about, everybody hears about diversifying, right? And I
Yes.
think that's something I touched on before.
Right.
So I want to hear a little bit about your super simple way to explaining diversifying.
Okay, so number one, I do believe in investing in real estate, which is how I got
Yes.
into working with realtors. I firmly believe in real estate beyond your primary residence being a part of a strong portfolio.
Right.
So we talk a lot about what does your portfolio look like? And I use a very simple illustration, and it's a bar stool. And you'll see that on my website, and you'll see it in different handouts that I use at my meetings. When you think about the round seat on a bar stool, that's your financial picture. I want you to cut a chunk out for every piece of debt you have.
Mm-hmm.
Not your primary residence, but school loans, credit
cards,
car loans, whatever. Sometimes you're sitting on a very, very broken up, wobbly seat,
Mm-hmm.
okay, financially. My first job with you is to help you take a look at where you are financially, and this is probably a good place to say, by the way, there's no cost to you for working with me.
Yeah.
I would rather help you get financially healthy so we can afford to do some great things together in the future for
Right.
which I do get paid. So we want to get your seat to where it's a full seat. But most of the time my clients are realtors and they love to invest in real estate.
Mhm.
And I show
We do.
them that they're sitting on a daggone one-legged bar stool.
Yeah, and I loved how you explained it to me that it's like real estate will have its ups and downs. And if you work in real estate and that's where your primary income comes from, and all of your investments are in real estate, on a year, 2 years that maybe real estate isn't in that like super boom that we experience, then both your investments and your income are like, I don't want to call it shaky, but are not what you usually love them to be.
Yes.
And that can feel really
Scary. So the other thing is with investing in real estate, until you sell it, you're really not gaining a profit from it to supplement yourself with. And then most of the time you want to take that profit to buy the next piece and repeat that cycle, not to live off of it. Okay, or you're wanting to save those properties to sell them so that you have that money in retirement.
Correct.
Okay, so it's kind of a invest and hold thing. So when we're looking at your bar stool and your income comes from real estate and your investments are in real estate, how do we get some other legs, financial legs on your bar stool that feed your passion and support you when sales are down or you're going through a slower time
Right.
in the industry? So then we look at how many legs do you have on your bar stool. My goal is to make sure we get at least 4 financial legs on your bar stool, and then get them to a point where they're completely even and there are no holes in your seat.
Yeah, and I know you and I spoke because obviously we also talk about goals, right? Which I think it's important, and a lot of people don't. I mean, we all talk about goals, but we don't actually put them into paper or know how to do them. So I remember telling you, I was like, okay, I'm still young, which is awesome. I'm putting money towards retirement, but I'd like to put a little bit more. But I also want to make sure I have some safety nets for when my kids go to college and all that stuff. So I know when I spoke to you, I was like, well, I want to make sure that I can touch that money 10, 12, 15 years from now when the kids go to school, right, or when big changes happens or when we moved. So you offered certain things for me that worked. So I think that's something that you do beautifully. You talk about the 4-legged bar stool, but also be like, okay, let's really talk about what you want to do with your money and when do you think you're going to need it and what is not letting you really, in quotes, sleep at night because there's these financial turmoil in your mind.
Yes.
And I think us in real estate, in our business, mine is in Antonio, we do this concierge, very personalized, very listening focused approach. Mm-hmm. And I think you really did that for me.
Yes.
And that gave me so much peace of mind because I know my money's growing. I know I'm not going to lose it. I know that when I need to access it, if I do, when the kids go to school, I'll be able to. But I also know I have this other beautiful product, and I'll let you explain that because I am a realtor and I do like investing in real estate. So we set up something for me to be able to put some cash away, but also use at some point if I needed money for a down payment or money for something specific that I wanted for real estate. So I wanted to talk a little bit about that one.
Okay, so there's 2 basic product types that I use. One is an indexed annuity. Mm-hmm. Again, both of these need to be written correctly for them to do the things that I say that they can do for you. And
right.
Most of the time they're not. Okay, so when you already have a lump sum of money, mm-hmm. $10,000 or higher, that you want to put away and get it growing, that's when we look straight to the annuities. When you need to create new money that you don't have today, we like to help you open your own private bank, so to speak.
Yeah.
We do that inside an indexed universal life insurance piece. Again, they have to be written correctly. You can write them on option A, B, or C. I write everything on option B, which means you have the death benefit and access to that while you're living. It's truly life insurance for life. You don't have to die to use it. Mm-hmm. So if you're diagnosed with a critical, chronic, or terminal illness, you get to have access to the cash in that death benefit. So if you have a $200,000 death benefit and you're diagnosed with a critical illness, which means you can no longer perform at least 2 of the 6 activities of daily living for 90 days or more. Mm-hmm. So it's acting like a long-term disability plan.
Yeah, and I know it's tough to think about that, but we have to. It happens. Death can happen. Illness can happen.
You're in a bad car accident and it takes you
a year,
9 months or a year to get back on full speed, and you're a realtor and you need to split commissions with somebody who's doing your legwork for you because you're stuck in a brace waiting on broken leg, something to heal.
Knock on wood, but yes.
Yeah. So now you get to have 50% of your death benefit to use during that time period.
Right.
And you do not owe it back. It shrinks the death benefit of your policy, but I don't write these policies to create a huge death benefit. We write them so that you can afford to maximize what you are allowed by law to put into them because we're creating your own private bank. You have your death benefit on one side and you get to use it while you're living.
I think that was my biggest thing. I saw it as like, if something happens to me and I'm no longer in this world, there's a life insurance policy, which is awesome.
Yes.
If I get sick and I need access to money because I have a chronic illness or, a terminal illness, something like that, I can access money. And then here comes the third part, which I love.
Here comes the third part. We write these policies. I write these policies based on what is the maximum you can afford monthly to put into it, and whatever that equals in death benefit. I don't go for writing. I'm not looking to write $1 million death benefit on you. I'm looking to write a $200,000 or $250,000.
Whatever you can afford.
Whatever you can afford. in that you can afford the maximum amount allowed by law to put into it.
Yeah, and I know the way we saw it because I told you, okay, it is in my goals in the next 5 years to buy a second piece of real estate to rent it, right? A rental or an Airbnb or whatever it may be.
Right.
He's like, this was a perfect plan for me because looking at the cash value that I can borrow from,
Yes.
I would have that down payment because it's growing.
And then the rent pays it back.
Exactly. So it's your money's still growing.
It is.
While it's in there, so it's working for you.
So you can access that cash in two ways. You can either just simply take cash out and you only owe capital gains tax on it, not full income tax.
Yeah.
So a lot of people, they go, okay, well, if I keep building this 401k plan, it's going up and down with the stock market and I owe full income tax on it when I use it.
Right.
If I do this, well, I have to pay taxes on the money now when I first put it in. You're paying taxes on this amount.
Yeah.
And it's growing to this amount.
Yep.
That you never have to pay taxes on because, again, two ways to remove the money. Simply take it out, you only owe capital gains
taxes.
But if you borrow it out, it's not viewed as income. You never owe income taxes on it. You just put a third of the value of your money back in your pocket instead of giving it to Uncle Sam.
And borrowing from it, it's like very small interest. So yeah, it's like using your own personal bank.
So now, I would rather see you purchase the life insurance piece, start your own private bank, create that cash value, borrow against that to buy real estate, and let the real estate pay it back. Now we've got 3 strong legs on your bar stool. And I always preach 4 legs. There are smart ways to invest your money that are geared toward benefiting you instead of the profits of the company.
So let me ask you this.
And they make plenty of money on the way, but don't worry about them.
Yeah, well, what I like about these investments is like they're fantastic for people like me who are business owners that are on commission, that can, have a few of these annuities, because every now and then you'll have a really great month and you'll have this money and it's like it's smart to layer these annuities, which I love. But also for people that like me, because I'm on the consumer side too, right? I'm like, well, I want to buy a rental in the next 5 years, which can be any of my clients, anyone out there. I feel like you also have something for that. So I guess one of my biggest questions for you was, because you say it's about having it written correctly. It's about making sure that you trust that person. So if let's say somebody is meeting with a financial advisor, or maybe they're not super happy with their financial advisor, they want to talk to someone else.
Yeah.
What is important when you're meeting with a financial advisor? What questions, what's important to make sure that you take a look at, how you should meet? Because I tell everybody, we have a full guide on like, hey, if you're interviewing realtors, here are the questions you need to make sure you're asking to make sure it's the right partner for you.
Right.
So what are some very smart questions or smart, hey, heads up, when you're meeting with a financial advisor? They're going to offer you certain products that are going to make them money, not necessarily you money.
Right. So I am never paid out of your money. No one is paid out of your money. There's not a dime that leaves your money other than the cost of the account.
So I think that's a good question, right?
Okay,
hey,
so
you financial advisor, how are you paid?
I am paid from the profits of the company.
Okay.
So they have to make money, which means you're making money, or they're not making any money, and I don't get paid.
Yeah.
Okay, so you've heard the saying of putting the cart before the horse?
Yeah.
We put the horse back in front of the cart. You make money first, we have the profits from that, and then we just keep everything growing.
Okay, so one good question is, hey, financial advisor, explain to me, how are you paid? I mean, I think that's, people ask me, I think it's good to understand.
Profits of the company, and there are no profits in the company unless you have profits.
Okay, love that. Okay.
So you're first, and then the company is second.
And I think it's a good point too, because when somebody talks to you and they tell you, oh, this is great, I think it's good for people to take the time and understand how products are written. Because I know you mentioned that a lot. It's like you need to make sure that it's written the right way. So I think that's another good question, right? Like, how is it written in terms of who does it benefit? Does it benefit me? And how does it benefit me? And I think for me, I always ask every time I do everything is a risk management.
Right.
So I always ask, what is my risk and what is the worst case scenario here?
Worst case scenario with the index products is that you won't grow, that it'll just break even. Best case, and it's never going to decline. What you invest originally is what will be there always.
Yeah.
Okay. So then the best case scenario is as the market grows in leaps and bounds, so does your income from tracking with these investments.
Yeah, so, and on a 5% annuity, I know worst case scenario is 5%, which I love.
Minus the less than 1% cost.
4%.
So 4%.
That's my worst case scenario is 4%.
That's better than a loss.
Then a 20% drop in the market, absolutely.
Yeah, at least you know it's never going to be below what you started with.
Because I think that's important, right? There's so many people, and like just with realtors, there's so many people out there that claim to know what they're doing and that it's in your best interest because we're supposed to be fiduciary and all these different things, but not everybody's like that. So I think those are important questions. So I think, and I'll summarize it and then you jump in. It's important. Number one, have that round bar stool, not be broken, right? So figure out how to manage your debt and all that good stuff.
Yes.
And then make sure that you have 4 strong legs, or at least en route to building them, and understanding for each of those legs what's the worst case scenario. And I think having somebody that you trust that listens to you, your goals, guides you in the right direction, somebody like you, I feel like it's key. For me, it was, because I never found anyone that I actually had built that trust with.
Right.
So for me, it's all about peace of mind. That's usually my goal.
I get to sit down and have private conversations with my clients. No one's ever going to overhear them. I never deny the fact that I'm a born-again Christian and totally believe in Christ.
I love that.
My clients come in, spill their guts all the time, and I don't ask for that. We spend time in prayer together, then we focus on finances, and we grow your wealth from there. But growing your wealth isn't just about growing the money side of your wealth, it's growing your spiritual wealth, your physical wealth. I'm always going to talk about a balanced life. When you think about that 3-legged bar stool so you don't tip over, you've got your financial wealth, your spiritual wealth, and your physical wealth.
Right.
Okay? So it's just, you can't separate them. And
Correct.
when you try to remove spirituality from the health of your finances or your physical well-being, you're just kidding yourself, because it's always there. It's always a part of it. It's just how well are you activating that or integrating it into your life or maximizing the benefit of it in your life. So are you making good decisions financially? Are you maximizing the benefit of your finances in your life? Are you taking care of yourself physically?
And
Yes.
I think, like you said, there needs to be at least a willingness to try to balance aspects of your life. So for us in real estate, I tell everybody, because a real estate transaction, even though we take care of everything and we do it as stress-free as possible, it is going to have some rockiness, right? And it's going to be ups and downs, and it's life. So what I tell everybody is, like, the decision that you make, considering all scenarios, which is what we talked about
Right.
today, how is that balance between the mental, the financial, the spiritual health, the physical health, all of that? Where is that?
And you have someone that you can talk to without criticism or judgment or anything else.
Yeah.
I'm not trying to convince my clients to do anything.
Yeah,
I'm answering
we're
their
the same way.
questions. I'm laying scenarios out on the table and letting you choose.
Yep.
What I do is the 3-meeting process. The first meeting is we meet and we have that original conversation. You say, yeah, I'd like to work with you. I'd like to see what you can do for me. And I collect the financial information that I need to come back and have meeting 2. Meeting 2 is me presenting what I'm seeing, what I'm suggesting, what would work better for you than what you're doing today, the products, the illustrations of those products based on your numbers, your age, your dollar values, and all of that sort of thing. At that point, the ball is in your court. We set a 3rd appointment when you are ready. Beyond that 2nd meeting, I'm usually enrolling people in something or switching their 401k plans over or whatever, their IRA accounts, whatever.
Yeah.
Or we're starting that life insurance piece to create new wealth.
So, so you've brought a lot of peace in my life. So I can't thank you enough for that.
All I can say to anyone listening is don't be afraid to call. It costs you nothing to come in and learn.
Yeah.
And I may not be the right person for everyone. That's fine. I will wish you well, help point you in the right direction. But if you like what I do and you like where I can take you, I have plenty of room to take on more clients. Don't let that bother you. And I'm very comfortable in my own skin and don't intend to stop doing what I do.
I love it,
Long time
because I am
ago.
too. So that's why we jive
That's
well.
why I love working with realtors.
So having this solid bar stool, it takes away from that, like, panic.
You're going through a time period where your income's dropping a little, and just getting people qualified to buy, and they can't afford, they have to qualify for lower priced properties. So there's dips in income because it's a lower priced property, and at the same time you're watching the stock market take a dive.
Yep.
So income dropping, stock market diving, that could put you in a very stressful, worrisome
Yep.
time period of your life. And this just takes it all away because number one, you've got your finances are growing in that indexed universal life product. So you've got your own private bank growing.
Yep.
You've got your annuities growing, and you can access up to 10% of that during that first 10-year window. You have options
That give you peace of
panic.
mind.
So,
I feel very blessed that we met. I feel like this has been a really big blessing in my life, and we're going to share it.
yes.
And we're going to share it, and hopefully, you can bless other people too, because this has been really good for me. So
Well, I respect you very much, and I respect the way you handle your work as well.
very exciting times ahead.